Well, good morning, this is Houndog Steve wishing you a very pleasant morning, and yes, cheers to a beautiful day ahead. I want to thank you all for joining me on this journey, and I hope that you find these videos at the very least entertaining and at the very best informative. And so yes, wishing you all the best, and hoping that life is treating you at least fairly. And talk about fairness, this just came across my desk the other day, and this is the Netherlands of all places. I'm kind of surprised at that, but I guess this is the whole EU thing, and they are getting ready to pass a law. It's basically going to the Senate, or the equivalent of the Senate, which is basically a majority of the people who already passed this in Parliament, and this is a tax on unrealized gains, a 36% flat tax on unrealized gains. So what essentially the government is going to do is that they are going to assess and predict what your investments would have returned, and they're going to tax you 36% on it, whether you take it out of that investment or not, whether you actually realize that gain in your hands or not. They are going to swipe 36% flat rate. Now this is absolutely staggering, and what this is supposed to do, you see, is to prevent the exodus, the flight of wealth outside of the country. And well, unless you own property, I think that's going to be the big downfall in all of this. But because you'll be tied to the land. But I can just see as much wealth is going to leave that country as possibly can. And this brings us back to the question: okay, where are you going to put that money? You can see that the government is going to come after that money. This is just a test. This is just to see what happens when you pull this kind of a stunt, you know. And this is on top of all of your regular income tax, your HST, your purchase tax, all of this kind of stuff, VATs. I mean, this is an over and above. And of course, once you get up into the real big figures, you know, you have a wealth tax on top of that. So, and of course in Canada we're talking about an equity tax now, which means that the portion of your home that you own, you know, so they will divide your mortgage up and they say, okay, well, you own 25% of that, and they're going to charge you a tax on it. And if you own 100% of your home, you'll be taxed at the full rate just because you own your home. And of course, this is an example of what happens when, doesn't matter whether it's the government or a business or an individual that starts running out of money, they start pulling out of the future into the present. And I always knew with my business, when I needed to put up prices, was you know, when I was going into the first week of the following month to pay the bills of the previous month. So it's a clear indication of where the governments of the world are at. They're absolutely desperate. They've made huge errors in judgment. Money has been wasted all over the place, being sent after you know, fool's errands in different parts of the world to supply them, you know, to keep them going in a never-ending battle. Now they've run out of money, and they're going to blame you, and they're going to come after you for it. So ask the question again: where are you going to put your money? You put it into a bank. It can be seized. It can be taxed. We saw this in Cyprus. You put it into gold. Well, you have to store the gold. It's got to be in a physical location. You have to go and visit that location when you want to withdraw some money. The same goes with silver. So where can you put your money that has proven over the last 11 to 12 years to be absolutely unassailable, unconfiscatable, and highly transactable in a deflationary system, which basically means that what money you put into that is going to continue increasing in value? And you guessed it, folks, that's Bitcoin. Strange as it may seem, you are going to see a massive flight of wealth, and people will take that chance because, I mean, of course, they will buy physical stuff, there's no doubt about it. But, you know, you need to be able to transact. And as I say, it has proven 100% to be unassailable. You cannot break into that system. You can transact with it, and nobody can interfere with that transaction. It's just between you and the buyer or the seller, period. So think about that. Like, sometimes you just have to think this stuff through and ask yourself those questions. Like, what would you do? Don't assume that these people all have places to stash things or hide things, and I mean, they probably do that as well. But they still got to transact, and they still have the same problems that you and I do, because, like I say, there is nothing in this world that is secret. If you want to transport that gold, it'll be known by somebody, and quite possibly intercept the place where you're storing it. You know, if you have enough gold to be able to store it like that, you may have staff. Maybe the staff know. Okay, here we go. Netherlands' new unrealized gains tax to unchain a wealth exodus. The Netherlands, February 2026, vote to impose a 36% tax on unrealized capital gains marks the most aggressive step yet in a European-wide pattern. Governments raising wealth taxes, watching capital flee, then proposing exit taxes and asset registers to stem the outflow. Across Norway, the UK, France and Spain, the evidence shows a consistent cycle. Higher tax on wealth triggers emigration of the wealthiest taxpayers, eroding the very tax base governments seek to expand. The Netherlands now sits at a critical inflection point with both a new unrealized gains tax and an exit tax proposal in the pipeline. While the EU builds infrastructure for unprecedented financial transparency, this means they're going to track everything you do financially. I don't know whether this is FinTrack or whether it is through the central bank digital euro. But that's what that means. That's code there. This report compiles verified data from government sources, court rulings, parliamentary records, and credible financial media to document the scope and trajectory of this shift. The Netherlands just voted a tax wealth that hasn't been earned yet. On February 12, 2026, the Dutch House of Representatives approved the actual return in Box 3 with 93 votes in favour, well above the 75 needed. The bill submitted by caretaker State Secretary for Taxing Eugene Heinen on May 19, 2025 replaces the old fictitious return system with a hybrid model taxing both realised and unrealised gains at a flat rate of 36%, effective January 1st, 2028. Think about this. This is a really important message and devastating to the people of Holland. Like I say, England is doing the same thing with an inheritance tax. I mean, farmers are doing away with themselves. Got to be careful what you say on YT, because they want to avoid this inheritance tax so that their children can benefit from the farm that they've worked on all their lives. So this is coming to a country, to a town, to a city near you, and I can't believe that somebody would make this kind of move and not think on their part that there are now alternatives in this world that operate outside of the financial system. Okay, so there you go, cautionary tale. Well, if you've enjoyed this video, please like, comment, subscribe below, and in the meantime, this is Houndog Steve wishing you a very pleasant morning, and we'll talk very, very shortly. See you now. Bye.